Australia's largest emerging companies are FinTechs, and they are drawing overseas investment into the country. Many, like Afterpay, Zip, and Upbank, are household names. But crucially, they are helping everyday Australians get smarter with their money. They are teaching them how to save, plan, and capitalize on every dollar they earn. FinTech is slowly but surely changing the way we think about money in Australia. Not only is it directly contributing to our economy, but it's making it stronger. Here at Intersect, we're discussing this future and asking the big questions. We'll be hearing insights from new voices in the sector and giving a platform to some of the behind-the-scenes talent that have put Australia's FinTech industry on the map. So sit back and enjoy Australia's most thought-provoking conference, Intersect.
Hi all, I do apologise for the sound not being there for half the video. Welcome to Intersect's digital program run and hosted by FinTech Australia. My name is Rebecca Shotguppy and I'm the CEO at FinTech Australia. The digital program is an opportunity to extend our reach and showcase the latest FinTech trends, policy developments, or companies at the forefront of new technologies or products. For those that cannot attend the physical event or purchase a virtual ticket, we'd like to take this opportunity to thank our major sponsors, the Victorian Government, Austrade, Xero, BPay, and Data Action. I'd also like to thank our digital sponsors, Manuva, BDO, Argyle, and Q2. I would also like to welcome our guest, Scott Farrell from Kingwood Melsons, but also the author of the CDR Future Directions report. And I'd also like to introduce you to our moderator today, Simone Joyce, FinTech Australia's chair. Thank you again for coming to the digital event series run by FinTech Australia, and we look forward to having you join many more of the webinars in the future. I'll now hand over to Simone.
Thank you, Beck, and welcome, Scott. It's a pleasure to be moderating our second instalment in the Future Directions report with Scott Farrell. Apologies for not having my camera on. I've had some slight glitches this morning, so I'm coming to you from my phone. I'm looking forward to asking Scott some questions so we can unpack a little bit more about the Future Directions report, but I might now hand over to Scott for some background on how the report was written and what work went into creating such a comprehensive report. Scott.
Thank you very much, Simone, and thank you to everyone who is taking the time to listen in. Also, for all of you that helped with the submissions, and FinTech Australia's very, very helpful submission to the inquiry, thank you ever so much. And for those of you who did it again and helped with the FinTech Australia inquiry to my current review into payments, thanks again. I cannot do these things without the submissions of all of the experts and clever people who give me their views. So this report, now, it's quite thick. There's a lot of it. What the heck was going on? Why did we have to do so much? Well, it was time to go further than the first report. The first report went from open banking to CDR, and it did, to use the words of the video that Beck just showed us, help put Australia on the map internationally. But we needed to go further. We need to know not only the different directions that this could take us, but we also needed to know how we would make it work when we got there. So this is both a guidebook and a handbook, where to travel and how to live. Not because everything in here has to happen at once, but because of all the incredible work that was done by everyone in making us submissions, and because of how much the CDR connects with other parts of our digital economy, I felt it necessary to actually write it down and to show how much thinking had gone on in the FinTech community, in the scientific community, in the business community, and in the regulatory community. So what did it tell us? It told us that there were 4 directions that we think the CDR should go. Firstly, it should go beyond data sharing into empowering consumers. And the clearest example of that is something called action initiation. Now, if you're familiar with the PSD2 or PSO open banking in the UK. This is similar to what is called right access, but far, far more extensive. And the reason it's far more extensive is, of course, unlike the European Union or the United Kingdom, we have an economy-wide consumer data right, so that anything that connects with right access goes across all of your data, and even in banking goes beyond payments. In fact, that element of going beyond data sharing is like a digital power of attorney, an ability for customers, be they businesses or consumers, to authorize someone else digitally to act on their behalf. It also, it had to go beyond banking. Now, I mentioned it was always going to be an economy-wide consumer data right. That is what our government has said. But we need to facilitate its a consumer's ability to share data beyond banking data. And that's on the basis that my view is that real people don't actually segregate the information about them mentally into this is my banking data and this is my energy data, for example. It's just stuff about them. And if they're entitled to share it, to get value from it, the borders between what we might say are different kinds of data are kind of not meaningful to those people. Also, and very importantly, it has to go beyond a standalone system into being part of an integrated data ecosystem or our digital economy. Now, an important part of doing this is to make sure it fits with other digital economy projects. For example, in relation to projects which are undertaken on digital identification and the connection between customer authentication and digital identification is very clear. Indeed, as you think of this rolling out to additional sectors, you can quickly see how the authentication mechanism which you use for the consumer data right could quickly become a primary means of identifying yourself digitally for all sorts of services. So that required analysis and work as well. Also, the use of the data standards, the accreditation, to leverage into other regulatory frameworks. And here you can see in both what I've just said and in this area, you can see a connection potentially with payments as well. Indeed, as many of you watching this video know, that payments are actually just a form of information transfer as well. And there is a very strong connection between the way that payments work and the way that data sharing works, or maybe there should be. Also, it needs to go beyond our borders into international digital opportunities. The reason I say this is since we did the first report in 2017, we completed it, I've worked with a number of countries around the world, and a number of countries have advanced their consumer-driven data sharing frameworks, and they present enormous opportunities, both for Australian businesses, fintechs like those watching now, to easily offer their services in other equivalent jurisdictions if we have interoperable standards and an ability to share the same principles as to the way it works, as well as for international entities to offer services to Australian consumers. And so that ability to have a commonality, might necessarily be exact equivalence, but a commonality between the way the consumer data rights works here and equivalent regimes work in other countries is very important for both helping consumers as well as helping businesses. Now, one other thing I should mention in relation to consumer empowerment is one of the issues that you do run across as you can share data through multiple sectors is a need to manage consents. And we do have recommendations in there in relation to consent management and the use of common terms so that consumers will not get confused as they are able to direct their data to many places. Now, just stepping back from this, how much has changed since 2017? Well, importantly, some things have not. In fact, if you read the little 4 words across there, which are the key principles that we thought of for open banking and the consumer data right the first time round, they're still there. And they're still very, very important. It still needs to and really must keep that focus on the customer or the consumer. Now, the consumer can include businesses as well. It's a bit of a quirk in the consumer data right, and that's another story. But it is focused on what it does for your customers. It needs to encourage competition. And that's not just competition in banking. It's competition in other sectors, and it's competition in data sharing too. And so it's designed to create a safe framework for that competition, whilst also creating opportunities for innovation and development, particularly for those who are watching today who are startups and need to ensure that there is a fair playing field for them to be able to bring their ideas to consumers. And of course, it still needs to be efficient and fair. We need people to have confidence when they are using the consumer data right, and we need businesses, large and small, to have confidence that the playing field is indeed level, regardless of the sector that they're acting in, and regardless of whether we're talking about a level playing field for data itself. Now, just before I hand back to Simone, there are two things which I wanted to point out, and they appear in very, I don't know what the word is, the two analogies in the forward, which I've received both criticism and compliments on, but they're very important. The first is that the consumer data right is supposed to be a better way of sharing data. In developing it, we always knew that people share data all the time. So this is not a question about enabling people to share data when they've never had it before. Instead, it's about providing a safer, better way of sharing data. And the analogy that I use in the forward is that it's like setting up red and yellow flags which show you where it's a safer place to swim at the beach. People are already swimming, and they will continue to swim whether or not you put up the flags. So the idea is to put up the flags as well as you can to enable as many people as you can to swim safely. The second is, as the CDR rolls out, there are lots of issues associated with data, a lot of regulatory issues which actually deal with the sectors themselves. They are actually issues for the regulation of banking, the regulation of energy, the regulation of telecommunications, for example. Now, the CDR shouldn't be required to carry the burden of regulating every single sector of the economy. We have other regimes to do that. And the analogy that I use in the forward is the CDR is a much better highway for driving consumers' data to the places they want it to go. But when you get to the destination, you come off the highway and a different set of rules apply. So as we roll out and develop the CDR, we shouldn't try to both write the rules of the highway as well as the road rules in each and every country town the highway takes us. So that is clearly not a summary of all 250 or 60 pages, and you're probably very grateful for that. But that is really the key parts of the background to why we did this, what we're trying to achieve, as well as the concept and principles which remain in mind as the CDR develops. Back to you, Simone.
Thank you, Scott. That was an excellent walkthrough of what went into the report. I must admit, your lovely bound coffee is looking a lot nicer than my very dog-eared printed out coffee. It's a bit beaten up at this stage. So look, listening to you talk about the background of the report, the intent of the report, and how it's setting out the pathway for the future, I can't help but think about how Australians understand the concept of data. We sit in these circles and have some amazing conversations about the possibilities of consumer data, right? But I presented to a group of people out of the fintech industry a little while ago, and I was talking very enthusiastically about the possibilities of CDR. And some of the questions that came back about that were really interesting. It really made me think that the relationship that Australians currently have with their data, they're either positioned to think about the data as something that they need to protect very closely so that large corporations can't come in and take advantage of it, or they're inclined to think about it being owned by the government, for example, the My Health campaign. So CDR, I think, has got a lot of early work to do to actually educate people about how to think about their data as valuable for themselves. Who do you think is responsible for doing that education?
We all are. I couldn't agree with you more, Simone. I never planned or thought that real people would ever know the phrase open banking or consumer data right. I actually thought that the interaction would be more like, wow, my mobile phone just saved me money. But underneath, the CDR was actually making that work and make it work safely, in the same way that people don't actually and shouldn't have to know how their money gets to where it needs to go safely. That's under the hood. They just want to drive the car. But there is an important point. There is a difference with money information in that regard. Is we know, we're accustomed to the transfer of money. We're not yet accustomed to the use of data. Now, that was one of that. I always thought it was one of the benefits of the CDR, is if you're going to learn how to use data, having a safer way and a set of rules around the way it's done will actually allow that confidence to grow. And that's why confidence was on the front cover of the first report, because I understood that people actually have to have that confidence. How's that going to start? Quite frankly, I don't think it's going to start by teaching people out of context. I actually don't like trying to teach people. I'm very much more in favor of people learning, and they would learn through possibly small steps as to how their data actually is valuable because it's actually doing stuff for them. And that, I think, is fundamental. So in other words, the usability of the CDR has to move forward at the same time as people are able to learn more about how it works. Now, if it never is the case that they hear the phrase consumer data right in that process, I don't mind, because part of this journey is once they learn and are able to take the benefits of data sharing through something like the CDR, hopefully they will turn their mind to, wow, that's valuable. How else am I sharing information? Am I getting the same information from it? And what else am I doing? But that's a bit of a learning curve. I think it's on businesses and the way that they create products, either to help the vulnerable or to help their customers. Obviously, it's on the public sector to educate people around the safeguards. But go back to my analogy, there's two sorts of people that watch the surf between the red and yellow flags. Some are the council lifeguards and some are the volunteers. I think the private sector are the volunteers, and if they know how to swim, they should be part of the education, just like the public sector, who it's their job to keep people safe.
That's a very good answer, and I think it becomes a little bit more complex when it's the framework or the rules have been endorsed by the government, yet the government doesn't own or access the law. Okay, now to a subject that I think is close to many people's hearts in the industry: action initiation, specifically payment initiation. Now, I know that last time we sat down and spoke, payment initiation was probably the subject of the most questions that we got in chat. Do you think payment initiation will be the silver bullet everybody is hoping it will be to really trigger off the ecosystem for open banking?
Yes. You probably want a better answer than that.
I would like some elaboration, please. Yes, please.
As I consider it more, both with other work and academic work, I think that payment initiation will be the window for people into making their data work for them without even knowing their data is working for them. Also, payment initiation, just like the sharing of data, in starting with something which people consider to be very valuable, i.e. money, data is very valuable too, will mean that it's done with an element of rigor and safety, which will give people that confidence. And then they can branch out into other elements of action initiation, into other sectors. Clearly, it's going to be hard and it's going to be complex, But I think one of the advantages that CDR has is it started complex and then can work back into sectors where it's not so difficult. Why do I think it's important? Is because it deals with something where people can get quite stressed. It's often not a whole lot of fun. It depends whether you're initiating payments to buy fun things or just pay off bills. But the ability to get that done easily and quickly, that convenience plus confidence, probably will take a burden off a lot of people. Plus the ability for it to help others will also mean that it has a high impact. So I think it is really important. However, I think it's really critical that it is seen as a stepping stone to broader action initiation rather than the endpoint as it is in the European and the UK systems.
Okay, excellent. Now, before I go on, I just wanted to let everyone who's listening know that if you have any questions that you'd like to ask Scott when I come to the end of mine, just drop them into chat or Q&A and we'll pick them up after we get to the end of our questions. Okay, so staying with payment initiation for a little bit. Last time we spoke, you explained to me the premise behind the recommendations in the report, leveraging things that were happening in market like MPS, which is now called Pay2, to bring that first payment initiation step live. Do you think that there is a danger that this type of payment initiation will become the only option that's widely available? And do you think that's a problem if it does remain simply with Pay2 and doesn't progress further?
The like everything in data and payments, the CDR has to live beyond the framework that we can see now. It's one of the most difficult things about being involved in any kind of policy or regulatory work in this area, be it data or payments, is it's changed so much in the last 5 years. How can you possibly predict what it's going to be in the next 5? Accordingly, what would be the preferable system, or would there be many in the future? So I think there, and for this reason I didn't recommend that a particular system had to be used. But in contrast, you do want to use a system that is the best that is available, and quite an astonishing number of submissions from different backgrounds indicated that currently the use of what is now called Pay2 would be a very efficient mechanism of implementing this. Now, the process that I recommended in relation to using the data standards together with the standards applicable to Pay2 was intended to allow the flexibility to incorporate new payment mechanisms as they came online. Take, for example, imagine we did another review in 2 years' time and everyone said, actually, we want to use this instead. It would have been an epic fail on my regard if that was not actually a possibility under the framework that I recommended. Now, practically, I'd have to turn to the brilliant, actually quite brilliant people at FinTech Australia who gave us a lot of background on the way that standards work. Hopefully, my recommendations haven't meant that new standards or changes to standards couldn't be created to develop the interoperability required. But I do think it is incumbent on everyone to make sure they keep an eye out for what the future has. And keep in mind that the NPP, for example, could offer an even better service in the future, and people would want to move to that. So my view is you don't want to be locked into something now, because everything grows and changes, including customers' preferences. So that balance, again, Simone, comes back to that's incumbent on all of us to keep an eye out for an uncertain future, to make sure that we can actually move in an agile way to actually adopt to it.
Okay, I feel like I just heard you volunteer to do another report in 2 years. Okay, so sticking with that theme, obviously there's accreditation and audits and standards that you need to adhere to become an ADR on the CDR. There are so many acronyms in these sentences. Similarly, there's a lot of accreditation and standards you need to adhere to become authorised to participate in the Pay2 scheme on the NPP. Now, they do cross over in some respects, but in some respects not. Do you think that we will see a system where you can use your accreditation on one of those sides of the scale as a quick pass through to achieve accreditation or access on the other side? I think that would be a cost saving mechanism potentially.
Let me answer this rather carefully. So the best way I can answer this is by reference to the submissions that people have made to me in my current inquiry, because this is right squarely within my terms of reference, my current inquiry. There is a consistent message, and not only from FinTech Australia, actually from payment systems too, that there needs to be an element of simplification around not only the regulation, but the way that it interacts with the access to payment rails. Quite appropriately, people did, in a kind way, point out, and Scott, it needs to fit in with your last set of recommendations too, right? Now, yeah, it does. I mean, there clearly is a pathway that startup businesses could take where they get accredited for CDR, they get accredited then for payment initiation, and then they build up such a good business that actually we want more. We want to be able to play a bigger role in Australia's payment systems, and we don't want to have to go and get a whole lot of legal advice to try and work out what we need to do next. Sorry for any other lawyers on this call. Now, all I can say is that simplicity would fit in quite well with the concepts of the CDR of putting the customer first, because it would obviously help customers to not have to move in and out of different things. It would also assist with choice and convenience. And if it were done properly, it would assist with confidence. So I can't say much more than that, but the message resonated with a lot of people who provided submissions to me on the current inquiry in relation to Australia's payments regulatory architecture.
Well, I'm looking forward to seeing that report. And I think you've answered my next question, which was, in your opinion, how important is the Treasury review into payment regulation to payment initiation? So we'll move on from that one. And we might move over to data standardization. Obviously very important for consistency of experience with products and services enabled with the CDR. Do you think enough emphasis has been put upon the standard of data being shared, the standardization of that data, and service level agreements around availability and thresholds for downtime?
This is a very good question, and what I don't know here is the balance that's been struck in the implementation. I'm not in charge of the implementation at all. I'm just an ordinary person. But what I do observe is that the reporting in relation to service requirements is quite a fundamental part of the obligations which exist under the Second Payment Services Directive, as well as under open banking in the UK. Now, part of that came from the original CMA report into what they were trying to do, and Australia doesn't have the same policy background for the consumer data right. It is to benefit everyone. But I think there's probably room, and I don't know where it would happen, for actually taking not a Scott Farrell assessment, but actually a technical assessment as to what is the data flow like? What is the quality of that data? Not to pick on people, but actually to take a technological scientific assessment saying, is this actually producing the data flow which we need to actually produce those results? And when I say data flow, I don't just mean in the volume, but in the quality. So I can't answer the question as to what is the result of that value judgment, but I do note that basically the two other leading jurisdictions do have quite a focus on that. And it seems to me that it's worth considering what that focus has given them, and maybe we could learn from.
I think we could probably find some eager technologists if that came to pass to help create those assessments. Okay, well, sticking with Europe, because we've spoken about Europe just now, looking at data standards. Recommendation 4.15 talks about stronger customer authentication standards ahead of payment initiation. So we need to be able to verify that customers are who they say they are in a more robust way when it comes to action initiation across the board. Is your intention that that will align with things like the strong customer authentication in the EU, as well as other international standards? You have mentioned international standards in there. Is it a one size fits all for our strong authentication, or will we be more prescriptive in what that needs to look and feel like?
Well, it's really flattering you keep asking me technological based questions. I'll give this one a crack too.
Feel free to take it theoretically.
I know there's people who know far more about this than me. The one message there is, I think we actually have to do better. And the reason we have to do better is because this is economy-wide, and because action initiation will go broader than banking, we have to make the value judgment as to actually, should we now be incorporating something which is far more like a very flexible digital identification framework, or the ability to choose to use those frameworks rather than hauling around my open banking login with strong customer authentication as my entry point to my digital life. The United Kingdom and Europe didn't need to do that in the context of PS2 and PSR open banking. I think we should, and that's why we obviously commented on it in the review. And now you can see why the review gets so big, because actually it's that's quite a sophisticated issue to try and deal with. So if you say, well, should people have the protection of that level of authentication when moving their money, that very well could be a valid point. Now then you've got to ask yourself, and do you need to do the same for services in other sectors which we judge to have a lower risk in relation to the misuse of the data or misrepresentation of the person? Maybe were it ever to apply to retail would be one of those sectors where, quite frankly, we don't authenticate ourselves very much at all. You have to consider that carefully, because you don't want to you need it, like everything in CDR, you need the regulation to match the risk. And it's not just one set of risk. The banking data is quite important. It's quite impactful. So I think some care needs to be taken to get that just right. And following Europe is not necessarily the right way to go, because they've got a much more confined system.
Yeah. Okay. So you touched on the nature of the sensitivity of the data, matching risk, et cetera, which ties into some of the recommendations you've made in the report around tiering access to the CDR. Now, Treasury and the ACCC have recently made they're coming out with some more updates, but it seems that tiered accreditation is actually probably not on the table for the next little while, due to the subjectivity of how do you categorize what's sensitive data versus non-sensitive and critical versus non-critical, because that might be different for all consumers. How critical do you think tiered access is to accreditation, to seeing more companies becoming accredited, if there's no tiering to define what the milestones are to get that accreditation?
Sure, and obviously I'm not going to make any comments on what our Treasury or ACCC have said in that regard. The principles I had in mind in recommending things like tiered accreditation were the same principles on which our financial system runs, which is the regulation is made appropriate to the risk. Not everyone has to be regulated as a bank, because the promises which are made by everyone are not as intense or as fundamental as those which are made by a bank. Now, what that was designed to do was to get to the point of having participation, and participation not by everyone being the same, but indeed everyone being able to be different, because that participation would allow the opportunities to be taken. If it is the case that there is some time before we can work out, and when I say we, it would be we as a country, because lots of clever people, again, clever people at FinTech Australia, we as a country can work this out, then to achieve that participation, we just need to work out another way of doing it. It is not, let me phrase it a different way, the CDR should not be a wholesale payment system only for the strongest and biggest entities. Somehow, there's got to be a way of allowing others to participate who do not want to take on the risks that the strongest and largest are happy to do. There are lots of ways of doing that. Now, that benefits real people because they have choice. Also, it means that there is a constant competitive tension in the system for everyone to get better. Tiered accreditation is not the only way to do that. It just happens to be the way that we do it for something which many people would regard even more valuable in information, being their money. And also, we know it works because it held up rather well in the 2008-2009 financial crisis. So, my recommendations weren't designed to pull something out of thin air. I really just went back to something that works with something more, potentially even more valuable in information, and took the word money out and put the word data in. There are other ways of doing it too.
Do you think that that's a direct connection though, just in the mind of a consumer? I know the value if I have lost $100 in a breach, or, I've sent it to the wrong person and they were accredited as a lower tier of accreditation, they still got that money. It's $100 that I've lost. Whereas data as a consumer, it's very difficult to assign a tangible value to data. And I would say that there's probably a little bit more emotional component attached to it. There's a feeling of more vulnerability, perhaps, that I think, I don't know, tiering accreditation on the CDR might be a little bit more opaque than assigning value like we do in the payments or the ADI system. Would you say that's true?
Certainly, it's difficult for anyone to value information because the value is subjective. But I do challenge the view that it's more valuable than someone's life savings. And the reason I challenge that, and that's what relies on tiered accreditation. That's why we have custodians and investment managers and super funds, all separate. And I tested that in the first review. I went and spoke to people that weren't from my background and weren't from a tech background and said, which would you like to lose more? Would you prefer to lose your life savings or all the information about you? Now, the responses were very clear to me, and obviously that wasn't a large sample, but I think we do need to take into account the fact that the frameworks that we have in place to ensure that people do not lose all of their super, do not lose their livelihood, do not lose all their savings, should be considered carefully as quite a good benchmark for keeping people safe, because people trust it and people know it. I do understand the point. It's very difficult to value your information. You do not need to know the precise value in order to treat something as valuable. And you are quite right. Indeed, there is a remarkable difference in the concept of me losing information about someone else rather than me leaving information about me. That is something to do with the accreditation process. It is also something which we do need to learn in order to deal with all of the data sharing which already occurs now. So go back to the red and yellow flags. It's really hard to work out how bad you'll drown out there, so we won't put red and yellow flags out. That's not the answer. The answer's got to be, right, we're going to put the red and yellow flags out and we're going to try and do the best we can to keep an eye on you during the process, because we know you're going to swim anyway.
Okay, thank you. That's a good answer, I think, a rounded answer. Let's move on to consent management now. So we're going down into recommendation 6.21, where you've recommended that no central consent management system should be devised. So thinking about the way there's the mandate management system or the trust ID framework to have a centralized repository. But we don't want that on the CDR. And you've recommended instead that consent data itself become available as a component of, as a data set. I think that's really interesting. It's such a powerful concept, but I'm really interested in how that all fits together. Do accredited data recipients then become data holders because they're holding consent? Can you, I know you've gone into this a little bit in your report, but I'd love to hear you walk us through how you had envisaged that part of the ecosystem.
Yeah, so obviously it is a very important function for you to be holding the consents of a consumer. In the same way, it's an important function for you to be holding all the authorities that someone can have to act on your behalf. Lawyers are those sorts of people, and there obviously is quite a bit of discipline applied to make sure we understand those obligations. Accordingly, to be, I think, to be accredited to actually guard people's consents for them, indeed to manage them, there's going to have to be a fairly solid piece of accreditation required. Now, who could that be? You must keep in mind that I have the view that is expressed in the law itself that participants could be required by the rules to share data, not just data holders, but data recipients as well. If I consider it to be an economy-wide system, I have a strong belief, which came through my recommendations, around reciprocity, because I believe the consumer's in charge of what can be shared. Now, that in mind, then you say, well, could it be someone who, at the start of the CDR, considered themselves to be a data recipient? And we already have people who are both now anyway. Yes, of course. Of course it could. And that also, it fits in with the recommendations, again, around the ability to compete to provide digital identification services. There is nothing to say that, particularly if it's economy-wide, fundamental services like being able to manage my consents for me need to be provided by the person who originally held that data. Indeed, that's not actually the way the financial system works. The people that manage your funds are nearly always not the people that hold your funds. So they can be, but it's up to the competitive market to determine, actually, here is a technology company, be it a FinTech company or another technology company, who has a brilliant way of doing this. They've got very high security. Actually, they're offering me something which I can't find anywhere else. And they're going to make all their stuff easier for me, so I never need to hear the phrase consumer data right. And I might not even need to hear the phrase consent. They might have a better word for it than that. I think that should be allowed because it keeps things safe and it keeps things changing for the customer. I think it's a tremendous opportunity. We have to consider it a little carefully, and there's a couple of issues related to privacy which I think we said needed some more thinking, and it's probably one of the few areas where we didn't keep writing in the report. That is something where that area of consent management is a real engine room to make this really work for real people. And it's certainly something I would encourage the very clever people of FinTech Australia to look at and see how they could actually recommend or think that should work to make it better for customers.
It's a really interesting thing, and as you say, it's a big opportunity both for simplifying how people manage the consent at the consumer end, but also for business model opportunities as well. It really changes the playing field a lot. Do you think that just thinking about data sets that are actually generated by people using the CDR, do you think that we'll see, I suppose, things that are happening on the CDR being pulled out as data sets in and of their own right? What I'm thinking is bank account switching is a really interesting result of being able to have action initiation. Do you think we'll start to see data and statistics after we obviously have that action initiation happening about just how many bank account switches have been powered by CDR based products and services? That would be a cool data set, wouldn't it?
Yes, I expect people would, I expect there's all sorts of economists who'd be really, I mean, they're already writing reports on it now, and I don't quite know exactly how they're getting hands on a big enough data set right now as it just warms up. I think that would be interesting information. It does come to another question, though, which is I think the risk with that information is using it as a sole measure of success. I've often been asked, so how many switches is success for the CDR, even before action initiation? And I've given a very cryptic answer normally, which is 2, which is I want to see a customer move away from their bank, and then I want to see the bank win them back, because that I wasn't asked to try and move customers away from banks. I was asked to do something which surprised and delighted customers. Moving back means that the friction must have gone and you must have had something offered to you worthwhile. The reason I say it's important, Simone, is the CDR is a means to an end. It's not a means in itself. It is a communication framework which allows customers to get the value and the power out of their information. And all of this in relation to the services which are offered using the CDR really need to come back to that one question is, how does this help the customer and the business at the other end of the line? And indeed, the same thing applies for other valuable information systems like payments itself.
Yes, and I'm thinking immediately of the statistics that are, I guess, harvested or reported today, and things like card not present fraud and card fraud that AusPayNet gather from industry and then present back. So interesting alternate data set once we get going properly, I think, on CDR. So I'm coming to my last question, and it's a bit of a round off overarching question. I just wanted to remind anyone listening, if you have any questions, now's the time to drop them into chat so we can get to them. We'll probably have a couple of minutes at the end. So Scott, back to the overarching 4 directions that you've identified in the report. They are beyond data sharing towards a data empowered consumers, beyond open banking towards economy-wide foundation, beyond standalone systems towards an integrated data ecosystem, and beyond Australia's borders, so looking towards international digital opportunities. When you were thinking about these 4 directions, and I think it's a very good summary of the overarching principles of what CDR can do you envisage them rolling out one after the other like a waterfall simultaneously? Do they really rely on each other? Will we see some maybe come to fruition for the end goal and keep evolving, or maybe we won't see a lot of activity in one of them? And do you think that will matter? I guess what I'm asking is, overall, if we got 90% on 3, 20% on 1, is that still pretty good? What do you think in the next 2 to 3 years, those 4 directions, what's the future for them? And I know you're going to say, oh, it'll change and we'll have to come back and review them, but
no, I'm not going to say I'm going to come back and review them.
No.
They're directions, not destinations. And why I say that is this was a different report. I wasn't asked to set deadlines. I wasn't asked to set the plan. I recommended there be a plan. But if I roll, also, you can tell from my previous review is I do think we can walk and chew gum. In other words, I was comfortable in saying we should do the rules and the standards at the same time, and we should get people together even before we pass the legislation, because everyone is needed on deck to do this. Everyone is totally needed on deck to follow these 4 directions. This ain't a gig for the government alone. This is a gig for our ecosystem, and it requires everyone to be invested in it. Which ones are more important? What's called right acts or action initiation is important because of what we just discussed. It makes it real. It does work for people. It's also hard. So we can't leave that till the end, or we might find reasons to never do it. But it's going to be hard. Also, we have to keep up with the technology that's being rolled out for payments. I think the economy-wide foundation is utterly essential. It's in there, and I don't really have that many recommendations on it. We just need to involve lots of businesses in doing this so that it actually is a proper ecosystem or network. That requires a bit of work, but it also requires a philosophy of, well, we're all part of this and it needs to be consistently implemented. The standalone system or the ecosystem, that partly will be done by the developments in other parts of our digital ecosystem. That's more of making sure the CDR, as it develops, doesn't develop separately from things like digital identification, for example. And the last one, I think we can keep going regardless of the first 3. Certainly, when we were allowed to travel, and now that we travel virtually, those of us who do work with countries overseas realize how well respected the CDR is. That's a tremendous benefit for Australian businesses if they want to offer their product elsewhere, as these other economies are coming online and bringing their consumers, millions of them, with them. So I think that is something that can be separately done and needs to be separately done. So when you go back to it, yeah, you kind of need to do them all, but they require different things to be done. They don't require the same people for each. And the best thing to do is to have a plan around that so the private sector knows what to invest into. Probably the most important thing for my last, 4 or 5 years of work between the public and private sector is to understand the importance of a shared plan, so that, and a dynamic plan, so that changes can be worked towards before they are due. Hopefully that will come from what is effectively setting out a number of different options, all of them important, but it's the ecosystem that decides which one is next. I reckon we can probably move ahead with most of them step by step.
What a lovely and optimistic answer. Thank you, Scott. Now, I don't think we have any questions from the audience at this stage, which is unusual. Normally we get inundated with them. So what I might do is say thank you very much for your time this morning. It's always a pleasure listening to you reasoning out what went into that future data report. And it is such a good report. I highly recommend reading it. If you haven't read it, oh no, that's not a question, that's a thank you as well. And look, I think this is our first official event for Intersect 2021. So thank you for participating. It's going to be a fantastic week for Intersect. I look forward to seeing everybody online and in person in Melbourne for the rest of the week. Thank you, Scott.
Thank you, Simone. Bye-bye.
Bye-bye.